Good morning, everybody. I am Yogesh Sapkale, Deputy Editor of Moneylife. We are indeed proud to welcome you to the flagship financial literacy seminar that is being held for the very first time in Goa. Mr. Mohan Jayaraman, who is the Managing Director of Experian Credit Information Company of India Private Limited. This will be a unique session because Experian, a UK-based multinational, has developed several modules to help our people understand credit needs and the consequences of a bad credit score. Especially, Experian has identified several real-life situations that we are likely to face as individuals and how to deal with our finances, especially our credit and borrowings during those times. May I now invite Mr. Jayaraman on stage?
So, as Suchita mentioned, what we've been trying to do over the next maybe about 45 minutes or so is to run quickly through some of the fundamentals of managing your credit history. The way we've constructed this is to set and achieve two objectives. One is to let you understand what a credit information company is. I come here as part of a credit information company and what a credit report is. And I mean, effectively what we want to cover and what I want to talk about is to tell you what a credit information company is. Questions. Why is a credit information company in any way important to me as an individual? What are the CICs? Who are the CICs? What is this entity? What is this concept of the CIC all about? What is the role of the CIC in this overall accessing of my credit in some form when I go to a bank for a loan and so on? So let's quickly go through these slides, which will be the fundamentals of what we are trying to talk about as we go into the credit sessions further, in further level of detail. A credit information company is essentially an organization that's put together that holds all banking data of any credit that you've taken from the banking system. And I must clarify, when I say banking system, this means non-banks, financial institutions, anybody that you borrow money from potentially. So the information about all these borrowings that you have in the marketplace is effectively collated and put together and held by these credit information companies. And this information, why is it held by them? It's held by them so that at the point of subsequently the bank assessing you or me for a credit line, this same information can be made available to them and it can positively help them in that decision making. Right? So what does a CIC do effectively? Firstly, it's an independent entity. It's not connected to any one bank or one financial institution. It's a independent third-party entity. It's licensed by the Reserve Bank of India. There are just 4 institutions of this sort in the country who are allowed to do this. And they hold the information in trust for the banking system and ensure that this information is made available to the banking system, and as I talk about it later, also to us as consumers. And this information is useful in various forms to be monitored, to be looked at for various purposes, and that's again something that we'll talk about as we go ahead. So we talked about the fact that the companies are put together under a specific act of the Parliament. We are governed by what we call the CICRA, the Credit Information Companies Regulation Act. I said that there are 4 companies who are licensed by the Reserve Bank at this point in time to run this business. One of them is us, Experian. We run bureaus in multiple countries. We are a specialized credit bureau analytics company. There are others in the country who do something similar. Civil, who's been in the country for a period of 7 or 8 years. And they've been running the bureau here. India was a broadly monopoly structure with Civil before the other bureaus stepped in about 1.5 years, 2 years back. Equifax, again the 3rd bureau, the 4th bureau is an entity by name Highmark. So there are 4 institutions who hold the banking information in some form of all of us consumers. So why is the CIC important? Independent studies have proven that access to credit is one of the important means by which the economy grows. Why does it grow? Because it helps consume responsibly, it helps you to build assets and so on and so forth. And only if there is information that's available in a place that's available to the banking system at the time when they are making that credit, can this be managed well. For example, if we go through what happened in India in 2008-9 when we went through that bit of a downturn, one of the bigger problems that the banks faced was that they faced a lot of delinquencies relating to unsecured loans that they had given out to customers. And why did this happen? Predominantly because they were not monitoring the leverage of consumers. Right? One would assume that the consumer individually would have monitored their leverage, but there is a tendency, as Devashish very rightly pointed out in the morning, of consumers being very optimistic and assuming that they can manage their finances. So they ended up taking a lot of loans that were in excess of their ability to repay. And this over-leverage resulted in their inability to make repayments. By the way, who pays whenever there is a loss in the banking system? Who pays for the bad loans of a bank? All of us consumers do, right? Because the people who don't pay for it are effectively paid for by the people who are paying the loans regularly. So in some form, reducing the level of delinquency in a financial system, which is what a credit bureau does, is actually healthy for us, for the financial system, because it lets the financial system grow responsibly. For us, because it helps us access credit in a better way at lower cost, potentially over a period of time. We talked about this in some level when I mentioned this. I just want to stay on this for a minute and talk about this in terms of, let's say, the way that this goes ahead into the future. And we've seen this in multiple economies as in other parts of the world where we're running bureaus. One of the things that happens over a period of time is that the credit information that a CIC holds about us consumers starts becoming important in the way the banks assess the credit. And as this grows and goes to the next level, one of the things that also happens is that the ease of access to credit actually increases the better your credit profile is. We'll talk about what a credit profile is a little while later, but I just want to leave that with you as a quick thought as we go forward. So quickly, so to talk about the role of a CIC in a credit system, let's actually take the typical loan cycle and let's look at a hypothetical friend of ours, Rahul, who needs a loan. Right? He's approaching the financial system for a loan. He identifies a credit need, which could be the case, in his case, let's say a house that he wants to buy or a car that he wants to buy, and he thinks that he needs financing for it. Not an unfamiliar thing to many of us here. He approaches a bank for credit. What does a bank do at that point in time? The bank, once they receive his application, goes through the process of checking with a credit information company like us on what his credit profile is. So what they do is they ask us for what we call a credit report. Again, I'll talk about a credit report in slightly higher level of detail as we go ahead. But this report that goes from us is used by the bank in assessing the credit of our friend Rahul, and finally determines whether his loan is accepted or rejected. So I just wanted to leave the thought with you that this whole process is, as India is going, is developing in the credit side over the last about 4 or 5 years, becoming much more dependent on the credit bureaus. 6 years, 7 years back, the banks were lending without looking at the credit information reports. From what we understand from recent studies and what I understand from some published reports, 88% of the loans in this country at this point in time are getting made on the basis of credit information reports that are getting taken. And I dare say that this number is only going to increase because the banks, a lot of them publicly owned, have the responsibility of ensuring that they make proper credit decisions, and they will have to do this on the basis of information. They have a definite vested interest in ensuring that the system is healthier credit-wise, and this is an easy means by which they can do it. So, what is now this credit report that we mentioned that is determining Rahul's access to credit and what the bank is determining about his credit profile? What is a credit report? What does it include? What does it not include? What does Rahul need to look at within his credit history to ensure that it is positive and that his access to credit is not in any way denied or his loan is not declined to the point when he makes the application? Effectively, a credit information report is a report, and we'll actually look at a physical document that will tell you what this report looks like, which contains details about all the information that you shared with the bank. So it basically contains your name, demographic details like your address, whatever, some other basic details that you shared with your bank. It contains all the loans that you've taken from the banking system. So for example, if you have 3 running loans, a mortgage, a credit card and a personal loan, all 3 of them would appear in series in that report. And against each one of those loans, there would be a track that will tell the bank, through the report that's available in the CIC, on how you have been repaying. So there's a repayment track record, as it is called, that's tracked within that report for each of the loan histories that you've made. The last section of the credit information report is also an interesting section, which contains all the enquiries you have made for credit loans over the last so many months, years into the financial system. And this in some form also is representative and part of the decision structure of the banks, as we'll talk about later. So just to look at this in slightly higher level of detail, what kind of identity information will be there? Typically your name, your address, you share some details like the PAN card number, the voter ID and so on and so forth when you make a loan application to a bank. So this information is available as part of the identity information that's available in the report. Then there's a credit account information, again the kind of loan, the date of last repayment, the credit track record, every month how you have been paying, whether you've been paying on time. This gets reported by the bank to the credit institute, the credit information company, and gets put together by us. So if you've taken, for example, a credit card from one bank, the mortgage loan from the second bank, and the personal loan from the third bank, we put it all together in the second section, which shows each of these loans, how you have been repaying each of these months, and what the status of each of these loans is over a period of time. And it also contains in the last section the number of times you have accessed the financial system for any requirements of credit or your inquiries that have been made over a period of time into the financial system. This is what the actual report looks like. And as I said, it's no different from what I described earlier. The first section carries the application details. So we put this in the name of the same Rahul that we talked about earlier, who stays in a particular place, has his date of birth recorded here, PAN number and so on and so forth. We then talk about the credit information accounts that he has. And you'll notice that each of these accounts will have some specific sections about how that particular loan is performing. The box that comes up there is actually the interesting piece that has what we call the credit track record, or the repayment that Rahul has been making on his credit card account for the last so many months now. So if you look at it, it tracks it for 3 years, 2009, 10 and 11, and actually it expands to be able to take more as the time goes ahead. And it tells you clearly what the repayment status is. So for example, in this case, Rahul has actually been delinquent on his loan starting from March of the year 2011. So he's gone into what we call 30 days past due. So he's missed one payment and he's gone 30 DPD as the bank's term it. The next month, since he's not paid 2 installments, he's 2 months past due or 60 days past due, and so on and so forth, going on to June where he's about 4 months past due. The point that I wanted to leave with you is that we somewhere assume in the back of our minds that a random repayment not getting made in a loan account is not going to impact us. But I just wanted to put it in perspective that all of this information is now available to a CIC and is being put back to a bank. The other assumption that we make is that this is all information that's disseminated, and if I'm making an application with Bank A where my delinquency is with Bank B, there is no way they'll know about it. That's not true. Since the banking financial system is coming together through the CICs getting formed, increasingly the ability of the banks, of course it depends on which of the banks are contributing data to which CIC, but that's a matter of detail. Over a period of time, this information will be available to the bank at the point when they're taking a decision. To take this further, in other countries, other delinquencies or delays in repayments may also impact your credit profile. It's not true in India at this point in time, but in the UK, for instance, any delay in paying of your utility bills, any delay in paying of your telephone bills, etc., could also potentially impact your credit profile. It's not come to that state at this point in time in India because the CICs in India are predominantly focused on banking loan records. But as we go forward, there's no saying how this whole situation will develop. So understanding and monitoring what you are delinquent in respect of all your commitments is actually something that's going to be important as time goes ahead. The last section, as I mentioned, is something again that we sort of miss out in the larger scheme of things. The number of times that we make an access to credit. We assume that this is part of regular life. If I need a loan, I go and make an application. By the way, all of these searches are recorded. So, for example, if you make a personal loan application 1 month back, and then another one 2-3 months back, and then another one a couple of months later, all of these are actually noted as searches in some form in your credit history. I'll talk about this in the next couple of slides, but these also have a bearing in your overall credit profile. So, to sum this up in some form, what is your credit history then? Your credit history is basically your repayment track record. In some form, the credit information report carries your credit history, and it contains a summation of the credit lines that you hold, the performances that you have made there, your address details, and also the enquiries that you made in the credit market over a period of time. What is also important is that all of the CICs sum this information up in the form of a single number that they call the credit score. This is done to make the interpretation of the report easier, the interpretation of the report easier for the banks and potentially also for the consumers, all of us. But CICs will usually sum this information up using some statistical models that they'll use into one number that will represent your credit score. How is that number usually derived? That number is usually derived using information of your credit performance that we talked about earlier, the number of times you've inquired, delinquencies, the kind of borrowing that you make. So for example, if you made a lot of personal loans, unsecured loans versus secured loans, that will also have a broad bearing on the way your score is constructed. The score is important because that's the means by which you'll be able to access further credit. Typically, the higher the score, the better off your credit profile is, and your access to credit will be easier. In developed markets, for instance, you will clearly see the ability to be able to ask for rate differentiation as a consumer coming through higher credit scores. In India as well, the process, and I can say this since we're dealing with a couple of banks who are already moving this to the next level, the access to credit is definitely becoming easier for customers who have a better credit score and a better credit history in the first place. Basically, the view that banks are taking is that they will apply maybe not as many controls as they would apply for other customers, for these customers who are on the top of the charts as far as the scores are concerned. And we believe that this gradation and this segmentation, this treatment of customers in a differentiated way based on risk is something that will happen in a much more pronounced manner as we go forward. So, by the way, what is in a CIR is something that we talked about. It's also important to know what's not in a CIR. Definitely nothing relating to the medical history of an individual is in a CIR, nothing relating to criminal records goes there, nothing based on task creed, etc. goes there. Buying information, consumer information doesn't go there. So all of this information is information that does not go into the credit report in any form. There are some myths about credit information companies. India is not developed into the stage where we are a common name, but in most part of the developed world, the credit information companies are associated with the credit process and they are identified with it. And there are some common myths about them. The myths are as follows: that the credit bureau or the credit information company, as we are called in India, decides who gets credit. Right? That the credit information company denies you credit, or that the CIR, the credit information report, is something that's available only to the borrower. How will I know what's there? I mean, it's only something that a bank can access. Is a credit rejection something that's held on your CIR? Does checking on your own report, right, in any form impact your credit rating? All of these are complete myths that are not reality. Right? The credit bureau provides the information to a bank. The bank takes a decision on the basis of that information, but the credit bureau does not decide the rejection or the approval of a particular loan. The consumer has definitely an access to the credit report as much as a bank does. In fact, in other parts of the world, for example, for Experian, it's an equal part of our offering to the consumers as it is to the banks. As it is in India, we offer our reports to individual consumers as well. However, the offtake from an individual consumer level is very low. At this point in time, the way the law is constructed, everyone here, all of us here, have the right to access our own credit reports through any of the bureaus. All that you need to know is to be able to access them. So their numbers are published. This information will be available in the websites. You will be able to access them through mail, through phone, and you will be able to ask for your details. You will have to provide some identification documents in order to ensure that they are not going to the wrong individual. But outside of that, this information is available to you. And I'll talk a little while later when we're going through the Crossroads on why it is important to be able to access these reports on your own and to be able to monitor them continuously. So let's get to the crux of what we wanted to talk about next, which is basically credit crossroads. Now again, at the cost of repetition, I'm going to say that the credit crossroads from the Experian context is something that we evolved through consumer interaction over a long period of time, and it's something that typically we came to understand as points that the consumer would be impacted by their credit history by, and hence it's important from a consumer standpoint to understand each of these and to be able to respond to them. Some of them, as Sujita mentioned, specifically perhaps are slightly more things to be looked at from the point of view of women, and we will talk about them in slightly higher level of detail as we go further. So just to quickly talk through the credit crossroads, and perhaps skipping was talking about the ones that are the more important ones. What are these points in your life when your credit history is at its crossroads, and when your credit record is likely to impact you in some form? If we look at it in terms of events, and these have been events that we've recorded over a period of time, typically the events that will, the points when you will face a credit crossroads is when you're getting married, when you're moving homes, when you're in that early phase of your life, when you've just not gotten into your career, but you've gotten into the ability to spend, when you've been denied credit in some form, when there is bereavement or when there is serious illness within the family, either involving yourself or any of your near and dear ones, when there is a divorce and separation. Sucheta talked about some specific cases. We'll talk about the reason why it's also likely to impact your credit record and why it's going to be important. Redundancy, again, this is something that India was not used to in the past, but it's something that's becoming a bit of a phenomenon as we go ahead right now. Loss of job is something that's happening once in a while within the financial system, within other parts of the industry, and it's important to know how to react to each of these situations from the point of view of being able to manage your credit history, and that's what we'll talk about as we go ahead. So let's talk about this first thing of this phase of getting married, and talk about it in terms of some specifics that will need to get looked at. I'm possibly not going to talk about this in great level of detail because in some form Sucheta covered a good deal of the points. I think the big ones to be taken care of is to retain some level of separation while at the same time you are moving into putting some of these basic concepts like merging finances. It's important to ensure that there is a distinct identity that is kept in place. From a credit standpoint, I think the biggest issues that seem to come to the fore at in this place is this whole theme of joint loans. Often, many of the banks, when they are approving a loan, as a matter of course, ask for the signature of the spouses, and it's done as a part of the regular course of the documentation, not realizing the implication. Any delinquency that happens in the loan will potentially impact the profile of your spouses. Let's talk about it from the woman's standpoint. It's important to know how her husband's credit profile is at that point in time, what the lines of credit are that are open to him at that point in time, and as a consequence, what the impact of this merged finances is going to be. Remember that at some point, even if there aren't signatures that are in place, the linking of the family unit is something that will become implicit within the banking system. So there will be some rub-off impact that you will have to deal with if you're not conscious of how to separate the impacts out, or at least talk about it a little in advance. So we put out a couple of articles that in fact talked about this, and I think we also tried to see if we can give you some of these leaflets that talk about these events in slightly higher level of detail within the packs that are available with you. But to half of the point of all of these credit crossroads is being conscious of the event and being able to talk about them. What we recommend in each of these instances when there are these crossroads is to act about it, is to go about it in a slightly more organized manner. Step number one, ensure that you take out your credit information report and that of your spouse at the point when you're getting married. I know it sounds horrible, sounds a lot like it's money and all of that stuff, and you should be talking love and affection and stuff, but it's an important practical thing to take care of at that point in time, and it's good to know if you don't already know about it, of the kind of credit lines that are open to your spouse at that point in time. Know it, sit down and plan it, and see how you can best put it together. And it's going to be important for you to do this at the point when you are getting married. It's of little use that you try and address it as a problem subsequently. Moving homes again is something that we treat as something fairly simple. There are two things that are implicit to this. One is the point of just buying a house. The second is the actual physical act of moving addresses and so on and so forth. There are two things to be taken note of in this particular context. One is that there's a necessity for you to be aware of the fact that if you're applying for example, a joint loan in this context, that you are aware of the consequences while you're doing it. one of the biggest issues that comes to the fore in this context is this whole theme of knowing your credit report while you're going and accessing credit. In fact, I'll talk about this in this case as well as in the denial of credit. Mostly, mortgage loan is an important loan in the course of your life, and me being able to manage that loan and keeping your finances in shape at that point in time is going to be critical to you. We strongly recommend that before you get into that decision of identifying the house and planning to buy it, look at the credit profile, especially definitely if you're going to look for a bank loan, which will be true for most of us when you're buying going to buy a house. It will be important for you to take the credit report out, look at your cumulative finances, plan for what you have to do there, and then ensure that you take on this liability. Again, I repeat, partly the theme of what we'll talk about in most of the Crossroads is the piece of the fact that you need to be conscious of the event. Number two, plan for it. Planning for it typically is to sit down and ensure that you understand the impact of taking these exposures and ensure that you are managing these exposures in such a way that they don't impact your future. We have a small set of slides that talk about managing your CIRs and managing your credit history, which will sum up most of these messages. But I'll just quickly go through each of these events then, just so that we are all aware of the things that we should be cognizant of when we're looking at the credit history. The other part is students, and again this is something that the college life is something that is a fairly different lifestyle compared to the responsibilities that come up subsequently, and it's at that stage that most of the initial credit exposures are taken, credit cards are taken, and so on and so forth. And that's also typically the most irresponsible phase of adulthood, because most people believe that at that point in time they can take those credit lines, they can walk away from it, and these are things that come back to haunt you as you go ahead in life. In most parts of the developed world, it's part of one of your employment contract that the employer will also have the ability to be able to access your credit profile to see whether there is anything untoward that they need to be aware of in that case. So, being aware of your credit profile at this stage and ensuring that the things are in place there is going to be critical. And again, the process will be to know what the information is. How do you bring transparency to it? How do you ensure that if you have any problems in handling it, that you reach out to the right set of people and so on. Denial of credit is the other big area which we call a credit crossroad, and this is the one that possibly impacts us the most, and which is why the first step that we talk about there is to stay calm. It's very difficult for us to assimilate the fact that, perhaps taking lead from what Devashish was talking about in the morning, we all think that we are in a better position than we are, and our credit profile is no different. We always think that we are in a better position as far as our credit is concerned, and it's that much difficult for us to understand why we are denied credit at that point. Which is again why we strongly advocate that there's a necessity as individuals, consumers, for us to be able to take appropriate steps before we are accessing the credit information report, so that we are not caught by any surprises at the last minute. The other big area is bereavement, serious illness. Again, this is another point when there is a lesser level of attention that's actually given to specifics of what's happening in terms of credit repayment, and more emphasis that's going on in the personal side. While that's not at all important, and that's something that needs to get focused on, it's also important to not forget the fact that this could be one of the events that could potentially have an impact on your credit profile over a period of time, and being conscious about this event at that point in time is also going to be important. Separation, again another event when you need to be conscious about it. Sucheta talked about the horror stories there, but if you actually look at the practical part of what goes on here, planning for this and ensuring that the separation is something that happens well is something that needs to also be worked on. And at some level, being aware again of the credit lines at that point in time, separating out the responsibilities, separating out the assets, is going to be important, and going about it in a systematic way will be important to handling it well. We talked about redundancy in income in some form. Again, this is the other area where as I mentioned, we are starting to see some more things happening in India at this point in time. Separation redundancies were not something that were very common in India in the past. It's something that's happening right now. Being able to handle it is something that's going to be important for any of us who go through these stages. What's again important is understanding your situation, understanding how to plan for it, reaching out for help in the right form and manner if you need any support, and taking things forward from there. So let's try and see if we can take the common lessons from all of these credit crossroad events and talk about it in terms of the way we should be handling things. I think fundamental to the whole sequence is a set of things that we call the key principles. Understanding the whole sequence and understanding the fact that the whole sequence finally depends on you. So it starts from the point your loan gets approved and you're agreeing to repay a lender as per a specific contract, ensuring that that you repay them. The lender on his part then updates these records. This goes into a CIC, it becomes part of a record, and again in some form it's a cycle that goes on. It's important to understand that you, me, as consumers are at the center of this. And these, to our mind, are the steps that we need to follow in order to ensure that your credit track record and your credit history is something that is maintained. So let's look at the principles in sequence. The first principle of which is knowing where you are is an important part. In all the credit crossroads, the first step that we advocate is that you know what your situation is, and the best way of knowing that is by accessing your credit information report from the CICs. So reach out to one of the CICs, ensure that this is your right, it's ingrained in the law. It's a marginal cost to you, but it isn't something that the CICs typically make too much of money on. So it's something that helps you in understanding your situation and knowing what your lines of credit are, and that's the first step to your being able to manage the situation. The second thing is, in some form, understand that this is you have made a promise of sorts to the lender that you will keep the commitment of repayment, and that's something that you will need to take as a first principle and apply into the situation. If you are not able to pay at that point in time, it's important to understand the lender's perspective, that they have contracted and they are not aware of the situation. So while you may be reacting in a bit of anger and in denial, unless you actually go out and communicate this to the lender, it's difficult for them to react. And remember, the entity on the other side is actually a bank. They are an institution, it's not an individual on the other side, and they don't necessarily keep track of what's happening in your and our lives. So unless we go and take the effort of telling them what is going on, if there's an event that's happening, they will not know about it. So the other thing that we do definitely advocate in this context then is this whole theme of being transparent and communicating it in some form, ensuring that you accommodate the fact that there will be certain cycle times that will be associated with these processes is also important. We often get loads of cases where people have applied for a loan, have been denied the loan, and they are looking for disbursement and then, of their loan in the next one day in order to buy that house that they have negotiated and kept, in the last stages of negotiation with the seller. Now, this is a point when it will be difficult for us as consumers to understand the situation, and you are already panicking. The best way to address these situations is to have time to your advantage and ensure that you start the process a little in advance. The other thing is, in some form, parallel to ensuring that you are maintaining the transparency, is to ensure that you demonstrate stability in some form. And at many points in time, the stability may not be in terms of your paying your repayment, your commitments in full. There have been instances when banks have taken a very positive view of borrowers who actually come out and said that they are not in a position to repay as they have planned, but they have asked for a rescheduled repayment, plan, which is as per their current capability. There is nothing wrong in asking for this and ensuring that this is something that you have access to. Chita talked about many of these agencies who are there to provide you support. We'll talk about the ones to access, ones not to access, but there are a few who we think will certainly help you plan these finances much better. The last part of the whole thing is to have a plan. I mean, it's a little difficult to do all of this without going to the person who's lent you money on the other side and say that, oh, by the way, I need you to help me tide my situation over, but I don't have a plan. it's important for you to sit and at least try and evolve the plan, perhaps together with them, perhaps together with some of these entities who can give you the support. But it's important to ensure that you have a plan to get over the situation. This is the other thing that, I mean, to an extent, we've not seen in a big way in India. But I was having this conversation the other day, and I'm starting to hear that there are a few entities that are coming up, and we are certainly hearing of a few of them as well. In the developed markets, you will find lots of entities who will have come up who promise to ensure that they will take care of all your problems when your credit is denied and help you rebuild your career and your credit history in some form. And of course, they'll promise lots of other things that they perhaps cannot deliver. The important thing to keep in mind is that nobody is going to be able to perform any miracles if you are not able to do it yourself and if you are not convinced about your capability. So most of these guys, by the way, will charge you money for it, and in most cases you will find that there is another way by which you lose money rather than build your credit history in any way. So beware of these people, reach out to the right set of people, and as Sujeta mentioned, the right set of people to reach out to will be the non-profit institutions that have been put together under the Reserve Bank directives by many of these banks. Disha is one of them. There are others like Abhay that have been talked about. There are a few others that are also evolving at this point in time. It's good to speak to them. You will find counselors that will be able to guide you on the things that you need to do and ensure that you have a clear plan that you can take forward. Final word that I'll want to leave here is that a lot of these problems are actually things that we create for ourselves and things that get compounded, in this case not necessarily to our favor over a period of time. This is a horror story that I've heard a million times over of how I took out a credit card in the year 2002. In 2003 I got the next card, but I did not want to use it, so I just cut the card and threw it away. By the way, the bank charged me about 4,000 or 5,000 rupees by way of an annual fee, and that just kept compounding. It kept compounding because we never reached out perhaps to the bank to tell them that we did not want that card, did not bother to close it out with them, and did not bother to follow it through with them to ensure that that is closed out. This is part of our responsibility as a consumer to ensure that this doesn't happen, and this is a reverse impact, as I call it, of the compounding. This number then grows into something that's a very large figure, and when your credit report is getting taken out, shows as a large delinquency there. And at the point when you are having to address this, you will find that you will have to run around quite some. It's better and best hence to have a regular view of what's happening in terms of a credit history and manage it better. And how do you do that? Take out your report frequently, ensure that you reach out if you see any discrepancy. The discrepancy, by the way, could happen in inquiries as well. In fact, we were talking about it the other day. We saw that there are instances where wrong inquiries have been made by individuals. This could be fraudulent inquiries that are getting made in your name. We've had an instance a couple of months back where a customer had moved houses, and his documents had been used to get a loan disbursed in his name. And by the way, the bank is now following up with him for the repayment of the loan. And he says that he's not taken the loan at all. But all the documents seem to indicate that he has. Part of them are forged, part of them, as we are realizing it, are forged. But all the mental agony that he has gone through over the last couple of months is something that is certainly something that he has had to go through. So regularly monitoring your credit report, ensuring that things are kosher there, things are good there, is something that will be a good thing to do and is a progressive practice. And that's something that we'll certainly leave as a thought with you. So broadly, if I were to sum this up in a way, I'd say that the key messages are knowing your CIR. A good part to ensuring a great credit track record is also to borrow responsibly, and that's something that we strongly recommend. If you think that you cannot repay it, you should not borrow it in the first place. And this is a tenet of borrowing, as much as there were many of the tenets that Devashish put together on the savings side. The last part is to manage credit effectively. And the key to doing that is to ensure that you keep in perspective your regular contact with the lenders, ensuring that you keep up your commitments, and monitoring your credit track record in the best possible way to ensure that you don't see any untoward thing happening there which can impact your future. So broadly, this is what we wanted to leave you with, and I'm presuming the